What's up, everybody? It's a Stable Lad coming at you with another weekly update where this week we'll talk about what's happening in crypto news, where I think we are in the sort of overall crypto cycle and how I sort of see that adjusting in my portfolio. And stay tuned to the end where we talk about some juicy APYs that I'm looking at and intrigued by. So without further ado, let's get into it. So this week, we're seeing just tons of stuff in the news cycle, all positive things. So even if you were sitting on crypto Twitter, or CT as we call it if you're in crypto Twitter, everything looks like it's the end of the world. All the prices of crypto are down, and the bull market has topped, and we're all going down from here. But I just don't see that happening. Is it possible? Of course it is. But if you kind of take a step back and zoom out and just take a look at where we are from a sort of news cycle, there's just too much going on right now, and price hasn't adjusted to that yet from a sort of token crypto perspective. And so I still think we're in a macro bull trend, and I think that we're still going well here. If we can take a look here, Wall Street bank Citi sees stablecoins powering crypto's next growth phase. Everybody's talking about stablecoins, talking about entering this sort of stablecoin supercycle, and this is just another big bank that's talking about it here. Tempo blockchain raises $500 million in a Series A round. So this is the striped back blockchain that they're using for stablecoin payments, and Stripe is one of the biggest payment players in the entire world, specifically, especially in US and Western Europe, but really has their tentacles everywhere in the payment space. And this is huge. They're moving at a breakneck pace, adding stablecoins here. So again, just more positive news. I'm just kind of showing you these generally to kind of show you why I think we're in this macro bull trend here. Stablecoins will change payments, but will change banking even more. More positive news on like just the first innings of where we're sitting in this sort of stablecoin revolution that we're in here. Stablecoin Watch, which is an account I follow and worth following on Twitter, did this really nice kind of like map here on yield-bearing stablecoins, and it's just really interesting to sort of see how fast these things have grown. Really, at the beginning, we kind of had SDI and this staked USDE were kind of like our big ones, and now they're just exploding all over the place. We've got Syrup's products, we've got StakeGo, we've got all these things to kind of pay attention to and see this like healthy growth in the yield-bearing stablecoin space. So worth kind of maybe following them on X and then taking this nice little nifty map and downloading it and just having it handy in case you're looking at what stablecoins have yield bearing into the stablecoin itself. There's a couple of things that I noticed this week, which is just notoriously challenging notoriously challenging market to work in because of the regulatory environment. They just sided with crypto stablecoins over their central bank warnings. And I'm seeing just a lot more of this. We're seeing the US and India trend with regards to the sort of growth of crypto in those markets. And what we're starting to see the very beginnings of is we're starting to see other nations worried about falling behind and actually making room for growth that they might not otherwise allow for. And this is just one example. This is something that maybe just kind of like goes unnoticed in the space, but it's really a big deal when high regulatory environments like the EU start ignoring their central bank warnings and allow for innovations. It's a big deal. Tether, actually, let's go over to this one here. Over here. Canada, here's just another example. Canada risks losing digital payments ground to US on stablecoins, Desjardins warns, right? So here's just another player within another country that's saying we gotta catch up. Otherwise, we're going to be left behind in the dust here as a country. So just two examples of that, just worth sort of pointing out over there. Tether, again, in sort of international news, Tether's partnered with Katani Pay or invests in Katani Pay to revolutionize Africa's digital asset infrastructure and cross-border payments. Cross-border payments and remittances are just hugely massive markets that stablecoins will and should completely revolutionize. There's from a payments perspective, payments globally and cross-border are so complicated with so many rules, so much regulatory red tape that stablecoins can fix that so quickly and then just remove all the middle people that are just taking massive chunks. We're not talking about like, oh, they're taking pennies here and there. No. They're taking like percentage basis points, like 100, 200, 300 percentage basis points, maybe even more in the case of like Western Union and these other big players with regards to remittances. Sometimes they're taking like 13%. And that's just not needed anymore. The infrastructure is already there to just completely demolish those old industries if they don't catch up and start using stablecoins themselves. Let's take a look at a few other things in the news cycle here. I posted on this on X as well, but Sky, which used to be MakerDAO, the supply just crossed $9.3 billion, highest level since April of 2022. Again, just to kind of see the growth of stablecoins in the space of one of the kind of OG stablecoin providers in the space. This is huge too. Tether's stablecoin touches 6.25% of the world's entire population. So Tether notched its 500 millionth user of USDT stablecoin. If you probably added USDC and a couple of others, you're probably at 10% of the world's population is using stablecoins. This is a drop in the bucket to what I think the growth of this will be. And again, just shows you how where we are in this cycle. It may seem like all the sort of token prices are bearish, but we're not even talking about the infrastructure, how well it's done, how well it's held up, and how much growth we've seen in that. If you just kind of zoom out of Twitter for a while and you zoom out of crypto for a while and just look at the growth of the space. We have an administration here who hasn't even been in office for a year. The Trump administration has 3 more years left. So we got 3 more years left, at least in this cycle of positive crypto development, of the regulatory environment being favorable for crypto and stablecoin development. That may change after Trump leaves office, but I doubt it. Once you start to see how these companies benefit from stablecoin usage, how users and customers benefit from stablecoin usage by lower prices and all these things, this is just one piece of the crypto world that we're talking about here, and it's really meaningful. I don't see it changing. If it does, we'll adjust the portfolio at that point. But as of right now, I see us still in a bull market cycle. And so what does all this basically mean for my actual portfolio? Honestly, not much. In a bull trend, I just don't see the need to make big changes. So while APYs have definitely dipped after that massive liquidation event, it's completely normal. Liquidity does move around and yields usually bounce back even stronger once the market finds its footing again, which I fully expect to happen. So for now, I'm mostly staying put. I will probably make a few small tweaks here and there. I have some money, a tiny bit of cash to deploy on Avalanche. But besides that, I'm pretty much staying where I'm at. If we were in a sort of ranging market or a neutral market, and I thought it was going to be sustained in that way, I would probably tighten things up a little bit, stick to the larger lending protocols with especially paying attention to really deep liquidity pools, just to make sure that I can always get my capital out. And if we happen to start turning bearish, which is always possible, and we will eventually turn bearish, but then yeah, I would go on full defense. I would trim the riskier stuff and move into the heavier, more boring, low volatility plays, more Aave, more compound, and huge liquidity pools. But I just truly don't think we're there yet. Right now, we've got as we've discussed here on this channel today, we've got stablecoin news hitting every single day. We've got the political environment that is favorable to the growth of crypto, and nations are desperately trying to catch up to the early lead that the United States has, and India as well, which is worth mentioning. And then, of course, the Fed has been leaning towards easing monetary conditions. They lowered a little bit last cycle, and there's expectations of a lot more lowering in the future. And these are all tailwinds for risk assets, for crypto itself, for DeFi. And so even though crypto Twitter feels gloomy and the charts are red, when I zoom out, all I see is a healthy macro bull trend. Let's get to the juicy APY part of the story here and some of the stuff I've been looking at. Gains has this beautiful vault here on Arbitrum. It's a USDC vault paying right now 13.78%. This is a nice juicy vault over here, and worth taking a look at here. I'm strongly considering this for my portfolio here. I think another thing with this, I do believe that this is a liquid vault, meaning that Gains trade generally has this cool off period. You can see here, you can't immediately withdraw your assets, but I do believe this is one of those liquid assets where you can actually trade GUSDC, and you can get out of it. It costs a little bit of money to get out of, or you can, of course, go through this sort of 3-day withdrawal period that they have here. But just something to keep in mind here. A couple of positions on Solana that looked really interesting here. And then just this one here, this USDC, USDT is paying 7.56%. Again, that's sort of got the best liquidity here, the best sort of volume, and paying the most in fees. So I like this pool here, even though it says it's paying a little bit less. Just some pools to be interested in if you're on Solana and you're looking at some liquidity pools on Radium. These looked really interesting to me.
Let's take a quick pause. If you'd like a simple reference guide that shows you how I think about building a stablecoin portfolio, from risk tiers to position sizing, and even how insurance fits in, I've put together a free guide you can download. It's the same framework that I use myself, designed to keep things steady and easy to follow at a glance. The link's right below this video. Grab the guide, and while you're there, make sure you're subscribed so you don't miss the weekly updates I share on how I'm adjusting my own portfolio. All right, let's get back to it.
On Morpho, on Arbitrum as well, this USDC reactor, it's got 10.9 million in that pool. It's paying 12.18% right now. Nice juicy APY on a USDC reactor in Morpho. Unitus is another Solana play here. I haven't studied Unitus. I'm not sure how to pronounce it so well, but the APY looks pretty darn nice on staked USDU. So that's something I am just exploring, because I've been thinking about putting a little bit more money onto Solana as the bull market continues. Just want to have maybe a little bit more money spread out over different blockchains, and I've only got something like maybe 1% of the portfolio, actually maybe even less, is sitting over on Solana. So something I'm exploring over there. Back over to the EVM side of things, this is on Base. I've mentioned Avantis the last couple of updates here because the APY is really, really juicy. I mentioned on the last couple of updates too that they had a junior and senior vault, which spread out the risk. So the senior vault had less risk, the junior vault had more risk, but they paid more. They've decided here to unify the vaults into one vault. So the risk is the same here. There's no junior tranche and no senior tranche. You get 22.72% APY, but you're fully backing the risk of their perpetual decentralized exchange here. So I probably will do a deep dive on Avantis. I've been studying it more. I like it more and more. I think it's really interesting, but this is a high risk play for me. So for me personally, I wouldn't put more than 2.5% of my portfolio into this play, but it is juicy APY for a USDC holding at 22.72%. On the more lower risk side of things, I was taking a look at Benqi. I have some cash to play with on Avalanche, and just a small amount of cash, and just sort of looking what to do here. And USDC is paying 8.3% on this sort of medium to low risk play on Avalanche, and I'm considering that for the portfolio. So it's a little less on the juicy side, but for a kind of a more set it and forget it, feel good place to put my money, paying 8.3% is pretty good on Benqi. Last couple positions that I've been sort of looking at here this is on Euler Finance and on the Arbitrum blockchain as well. There was just some really cool liquid markets here. So you've got this USDAI position paying 33% here. That looks really, really good. So it basically takes that Pendle position here and it's paying you 33.5%. Pretty nice. But if we also look down here, they just have some other pools that look pretty good too. Staked USDAI for a high risk stablecoin position, not too shabby, 12.21%. Again, USDT, this is again under 10%, which I always try to kind of find 10% stuff. But again, this is pretty decent, right? This is Euler on Arbitrum paying 8.64%. So pretty decent stuff on Euler. And there's a few other markets on Euler that looked interesting as well. And then the last thing to kind of mention here on Pendle, there were a couple of pools that I was exploring. I do have a small position here in this USDAI fixed position on Pendle, I think in the plasma market on USDAI, which is paying 33.5% fixed. Really nice position over there. But I also was looking at this USD position here on the plasma blockchain. So this is a USDT is the collateral that you put up here, and then you get this USD Midas, and you're paying you 15.1% fixed. It's also a 98-day, so almost 100 days in that position, which I really, really like. If I can make 15% or a decent amount of percentage and have my money locked in a fixed position that's a little bit longer term, I like it. It's one of those kind of set and forget plays for me that I feel pretty comfortable putting in there. So that's one that I'm exploring myself. That's it in terms of the juicy APY that I've been looking at this week. I do expect to see a lot more juicy APY as these DeFi protocols continue to grow, and I expect to see money start to rotate back into some of these things again. So I'll probably, right now my portfolio is staying pretty stable. I'm probably going to do a couple of changes and a couple of additions, which I'll talk about in more detail on the Substack if you're a Substack subscriber. Otherwise, I expect that I'll start to make some portfolio moves in the coming weeks as we start to see some of the growth and some more some of these more alternative plays. So until next time, stay stable, and we'll see you on the next week's update. I'm the Stable Lad.
I'm the Stable Lad. And if you like today's video, please hit that subscribe button. Every week I break down what's happening in the world of stablecoins and why it matters, clearly, calmly, and without the hype. This channel is for educational purposes. It is not meant to be financial advice. So always do your own research and manage your risk wisely.